gave us a push to the upside. I broke this structure, and now what you just do is that you wait for the price to come down to your order block, that is down to this axis, down to this place. But unfortunately, price did not respect it, so it's a loss for us. Or how let's fit the price left us, so I won't have to bother myself about it. So we have lots of opportunities using S&P. And I think one of the benefits of trading S&P too, it also helps you to have a minimal SL. Like, you don't have to rate much, except you're using a high margin for those who are trading futures. For forex traders, maybe you use a big lot size, so it will definitely help. So if you're a forex trader, sometimes you can have 2 pips SL, 3 pips SL, or maximum 5 pips SL. So you can use the kind of lot size you want while trading. So let's see if we can identify some. Yeah. So let me just find here. Okay, we have something here too. Let me bring it out. This zone. Now what happened at this zone is we had a sell candle, a push to the downside, which is a sell candle, then a massive buy candles to the upside that also broke structures. What happened? It broke this structure. So what you just do normal is for you to identify your order block. You identify your order block, you put your pending order. Sometimes you put your pending order at the open of the candle or 50% of the candle. It depends on your own risk management, what you want. But for me, most times on a 15 minutes time frame, I don't put my orders at the open of the candle. I put them most times at the 50% of the candle. So 50% of the candle, I'll look for buy around this area after having a break of structure to the upside. So first of all, is for us to identify our trend. What is our trend? Is it an uptrend or a downtrend? An uptrend, we'll be looking for higher high, higher low, higher high, higher low. Then the next step again is for us to identify our block, either our demand zone or our supply zone. Now for our demand zone, we'll be looking for the last sell candle to buy that broke structure. This is the last sell candle to the buy that broke this high. This is our last structure. So we have to just draw a line here using your trading view. You can use that on your use it on your trading view rather. So you can just draw a line here. You put in your pending order around this zone. Yeah. But if you're not comfortable with the risk or what you're risking with your loss and your SL, you can technically just fix 50% of your entry. Just put your entry at the 50% of the order block and you're good to go. That is for that. Then the next thing I'll also like to show briefly is refinement of order block. So sorry first, let me ask, I don't know if you guys have any question first, so let me know if
Okay, good morning, boss.
Yeah, go
Before
on, sorry.
God and mine, some of us are complete newbie here.
Oh,
So
okay.
yeah, we are complete newbie here. High, low, low. I don't think I understand, but I just say let me just wait and see. Maybe before the end of the class, I'll get the point. That's why.
Okay.
So we need more like and the basic. If you can just get the basic, there are some, there is the basic in this business, and some of
Okay.
us here just waiting for a signal to place or to trade. So if there's any way you can go down below our own, below some of us, I think it would be appreciated. Thank you.
Okay.
Like what tool is this? What tool is this? So that is this something one can be playing with while you are teaching?
You say what? Sorry.
What tool? Like is this in a Binance app or is there any special tool that you are using right now?
Okay. All right. For this, I'm using TradingView. Now, the reason why I'm using TradingView, if you can see clearly here, you see BTC, USDT, Binance, and you see 15. So BTC, Binance, so it's showing you how the candlesticks, just where you have it on your Binance. That is how you have it here on your TradingView. But the difference there is that on your TradingView, you can save your markups. You're setting an alarm or you want to put a pending order, depending on the kind of trader you are. So you can easily just open your TradingView and okay. Do you understand? It's not like it's not like you're using TradingView to place your trade. TradingView basically is just like for analysis. It helps you to use different kinds of tools for it to run your analysis.
TradingView on Binance, right? On mobile Binance or laptop.
Yeah, you can use it on your laptop. You can download it from your laptop or your mobile TradingView. All is the same. But what will happen is that after this class, I will send you a link. Maybe I'll send a link to the group. I'll ask Frank send a link to the group on how to navigate around your TradingView. So basically, TradingView is just for analysis. But there are some persons that also use this TradingView to trade if your broker is on TradingView. But basically for me, it's just for analysis. Like you use it for analysis. That is just it. So your markups you won't just mix up your markups. You can just analyze so many pairs and you'll be looking at them, drawing lines and all that, expecting price to get to that zones and all that. That is just it about TradingView.
All right. Good morning, everyone. I want to ask a question. Like now, in this TradingView, I want us to link it to the signals that is being dropped in the group.
That's the question.
Okay.
When a signal is being dropped in a group, we are expected to go to TradingView or to look at the chart. Now you discover that before we see the even you see the signal immediately, then you go to this TradingView. The trade has already started moving. At that point, do you still need to come back to the TradingView to start doing this analysis, or you just enter the trades like that?
Okay. I think the question there is okay. Let me break it down. The signal has been dropped in your in the group chat there. It's just for signals. I think to make analysis. Like you don't need to make analysis about. So if someone should say you should buy obviously you're buying near USDT. So, but I think the purpose of this class is for us to understand the basics of technical analysis. No, that is not the purpose of this.
Okay, I really appreciate
I don't know
the class.
if you get my answer.
I got your answers. That means the analysis has been done in the signal, right? Then we are just to follow the signal.
Just to follow the signal,
just to follow the signal. But how do we know when to exit the market, assuming that the trade didn't go as expected? Since it's a project, I think it's a project.
Okay. Well, let's just talk about risk management first. Like me in person, I have the way I trade or anything. So if for instance now you're giving a signal that if you buy BTC USDT at so price, you understand? Obviously from your app, from your Binance app, from your stop loss and everything, you see what you're risking. You also see what you lose, as in your take profits. You also see what you make if price hits your target. That is one. Then I will also suggest that if price should move, let me say, by 10% away from your entry point, you should move your SL, that is your stop loss, down to your entry point. Now, moving your SL to your entry point, it means that you have secured, it's a risk-free trade.
Okay, yes.
So you're not risking anything at that point. So if you don't make profit, or let's just say finally the trade came back and hit your SL, then you're out of the market, but you're not risking anything.
Okay. And in a situation whereby the market did not move immediately.
And in a situation whereby the market did not move immediately, it all depends on you. If you're not comfortable, probably you're not comfortable with the signals or anything, or you think maybe this trade will go bad and all that, you can close the trade.
Okay.
I think at that point you might not be even losing much, maybe few percentage and all that. Yeah. But if you want to do it if you want to be on the safe side, once you're in a trade and trade has given at least 5 to 10% of it has moved like 5 to you move your SL to that point.
Okay. It's all right. Thank you.
Yeah, so I don't think that there's more questions. And someone was talking about the basics. You're welcome.
Sorry, good day.
So someone was also talking about the basics. I think the basics of technical analysis. Yeah, good morning. Sorry.
You can go on, sorry. I'll ask after you're done.
No, you can ask. Maybe.
Okay, so my observation from the chart is this. You know, when a signal is dropped, most times your entry is being triggered because most times I enter on limit. In fact, all the time I enter on buy limit. So when your entry is triggered, the trade might just take few pips upwards and come back. But my question now is, most times when I put my stop loss, because my stop loss is okay when the market gets to this point and I cannot take the loss anymore, take me out. My account does not do that. My trade does not. It will keep taking both the money that is left on my account. It keeps taking from that one, and you see that at the end of the day, it just wipes out my account. Or most times when my profit is being read, my profit does not take profit. It keeps going and going and going. Sometimes I just have to end the trade by myself when I feel that the profit has already gone more than my take profit. I'll just end it myself and leave the trade. But I don't know why it's like that. Is it because of the cross and isolation, or the leverage? I don't understand. So I'm just confused about that.
Hello, I don't know if you guys can hear me. Okay.
Sure.
It's back. All right.
Sorry, boss. Are you actually done?
Okay. Can you hear me now?
Yeah, sure.
Okay. Sorry, I missed what you were saying. I think it was network issue, so.
So what did you say?
Yeah, I missed what you said. Like, I think there was network issues. So
Oh, okay. I
you're
said
talking about
when I
your
enter it,
okay.
when I enter a trade and I place my stop loss and I take profits, and when the sometimes like when you take profits, the market does not obey my take profit. It does what it is mind. Most times I'm the one that just end the trade and leave the market. Then so yesterday I observed that when it got to my stop loss, it did not take my stop loss. It wiped me out of the market because I just dozed off and woke up like later at night and saw that my account was already zero. So I don't understand why it's because I do put the money I want to trade with on futures and leave the rest on my spot. So all the money on my futures was wiped out. I don't know, and that's not what I entered the trade with. So I don't know if it's because of the leverage, this cross or isolation. I don't know why it keeps doing like that.
So are you using isolation or cross? Which of them? Hello?
I think she has left. Oh, I think she has left. You can go ahead with the explanation.
Okay. I don't know if she's using isolation or cross. And sometimes I think Boss Frank said something about the SL margins too. I think in the group chat he handled such issues. He was talking about the SL. Like sometimes my SL and yours might not be the same. And my account can probably, or it will be able to take such space and all that. But I think maybe Frank would be in the best position to answer this because me as a person, I haven't experienced it before. So maybe Frank will be able to answer that properly from now.
Okay. For this isolation and cross margin of a thing, which one is the best for beginner like us? Which one is the best? And another question again, let me just ask my question so that I will not be disturbing others. If there is a video this guy sent, Bamse, that if you want to still remain in the market, if you want to still remain in the market after taking profit one, sometimes they will give target 1 to 6, which you divide the size of your USDT by by 6. If it is 6 or 5 target they give, you divide it by 6. Then you enter to take when you want the market to trigger and how much you are putting. So now, if I want to still remain in the market, maybe I put $5 and I want to remain in that market, continue. If I take profit 1, let profit 2 continue, target 1, target 2, 3, 4. So now, if you want to set the trigger for that take profit 1 and still remain in the market, and 2 is different from if you want to set stop loss to take your stop loss to the entry. That means the market has moved and you want to take it to the entry price. That you take your stop loss. It's different from this. And I don't know if you understand. If you want to remain in the market, that is you want
after taking
trigger and you put the trigger amount, then you put the price you are using. That is, if you are, maybe assuming you are using $100 now, like the total size of your US is 100. Like you divide that 100 by 6, then you just input the trigger, then enter this thing, the amount you want to use to trade. Now if you are using that pattern, the stop loss of the thing, moving stop loss from to entry price will not work, it will not be available, because it's not the same way you set it up. Because if you go there, you have like 3 options there. The first one is when you can move your stop loss to entry price. Why the second one? The second one is when you can move your stop loss to, I don't know how I can share the screen there. So if the first one now is where you can put your trigger and still remain in the market, while the second one is only for one. If you want to take profit 1, 2, 3, or 4, you just set even 1 or 2. But if you hit that one, you are out of the market. If not 2, you put. If you hit that 2, you are out of the market. While the other one, where you can take target 1, 2, 3, don't have option of using the entry price as your stop loss. I don't know if you get me. Like most of what are using phone.
Okay, I think I've written it down. So what happens is that maybe later a video will be sent to explain this scenario. We also talk to Frank too, to be able to explain it more better. But I, as a person, I haven't experienced it, because what I do is I trade range to range normally. So yeah, that is what I do. But I'll still communicate with Frank and all that. Then we'll know.
Sorry, this range, is it this like signals a drop for most of the signals that are there? This range, do you mean that if you hit your target 1, you enter again, or you don't normally set it to take profit 1, 2, 3, 4?
Like, it depends. Like the last one we traded, I think I am someone. What we used to do is that range to range is just like, okay, I expect price to move from, I was talking about higher low. So I expect price to move from this point, from this, like, let me use the screen. Now, let's just say this is where price figures us, you understand? So sometimes I don't wait for, like, let me say I'll take profit here, take profit here, take profit here. So what I do is I range to range. From this point to this point here is a range. Okay, you understand? So my target is just from this point to this point, and I'm getting what I want. So I'm using the method I was actually trying to teach. Okay. You can just achieve it, maybe with a tight stop loss and all that. You can just achieve it and maybe make, depending on your margin, you can make maybe $20 or $30 and your leverage. Once price gets to this point, I'm out of the market. So anything market wants to do is its own business. You don't own the market. That's why I was seeing something in the group whereby people were actually complaining that they made money and they lost money. It's because every time we want to be involved in the market. So once you meet up your daily target or you have made some money, I think the best thing to do is just to relax for the day and look for other opportunities, maybe the next day and so you don't win all the time. So the range to range idea is just from your entry point to the next high. So there are some persons that has good margin, they make a lot of money from it. So it all depends on your method or how you want to be trading. You understand? Like some persons, 18% is enough for them for the day. 20% is enough, 30% is enough for them, 100% is also enough. All it depends on your margin. So you know what best works for you. You understand? So that is just my own idea of how I trade.
Thank you very much.
Yes.
Ayo Bami, we are waiting for you.
Sorry,
Ayo.
you asked me a question.
We are waiting for Ayo.
Okay. I said something. I said, I think Frank answered that question in the group. He was talking about your SL and what you have in your futures account too. But I said we'll definitely, maybe there will be a video on it. I'll also talk to Frank. We'll be able to send a video on it, on like what's the problem and the cause of it and the solution to it about that.
Okay, no problem.
So I don't know if this phone is online.
Yeah, I'm here, man.
Okay. Baba. All right. So from the look of things, I think we don't even need to talk about supply and demand. It's basically about structures. I think the higher high and the higher low stuff. So let me see if I can just mark them out. Now, I think one of the basics is for us to know the trend, just as I explained the last time. Understanding your trend. Once you open the chart, what are you seeing? You identify the trend, if it's an uptrend. For instance, this is an uptrend. So market went up, it also came down. So when price goes up, this is your higher high. When price comes down, this is your lower low. This axis is your lower low. Higher low rather. Price goes up, same thing. Higher high, comes down, higher low. Goes up, higher high, comes down, higher low. So once you say anything like higher high, higher low, it means it's an uptrend. Now, this place, this high here, price gave us this high, came down to this place as our higher low, went up. This particular axis that price broke, we call it break of structure or BOS. Let me mark it out. So this place is the break of structure. So we have higher high, higher low, price pull back. So you can either call it a pullback, retracement. And also went up again and give us another higher high, meaning price broke this place, this higher high, that is the last higher high. Some persons call it swing points. So price broke this place, broke this high, went up, came back here again, higher low, went back up again, higher high. Let me see, mark this again. We're having another break of structure. So basically, the market, anything about futures, it's not like it's just a bullish run or so. So we always have structures. Market respects structures a lot. So price is still in an uptrend. We have higher high, higher low, higher high, higher low, higher high, higher low. Then we have lower low. Now lower low is for a downtrend. Now price failed to break this high, this particular place. So this place is our lower low, this particular axis. So what you need to do is that anytime you open your chart, you need to identify the trend. What's the trend? Is the market going up or is it going down? Using either 15 minutes or the 1 hour time frame. Now let's see if we can identify a downtrend. Now look at this. We have lower high, lower low, lower high, lower low, lower high, lower low. Meaning price is breaking all these points. Can you guys see? Now, in a downtrend, we have the lower high, which is the upside. Immediately, price brought this down, lower low, which is the lower low. This point here, it gives us a break of structure to the downside. So at this point, you will not be looking for a buy. Never. You should be looking out for a sell. So you wait until the buy is over, then you continue selling down. That is the reason why you see when price is going up, it comes down, goes up, comes down. So you look for an entry around any place, depending on what you're trading, but around any zone. But you make sure that it's after the pullback before you take your sell position. So in a downtrend, we're looking for a sell positions. In an uptrend, we're looking for buy positions. So anything you're looking out for, or anything you're watching out for, is either for a buy or a sell. But once market is accumulating or consolidating, you stay off the market, like you don't even trade, except you have much experience in technical analysis that you can say, okay, fine, let me trade and do, depending on your level of experience in trading. So identifying your highs and lows, either if it's an uptrend or a downtrend, matters a lot. So I don't know if there's any question in identifying structures. Let me see if anyone is following.
Hello.
Yeah.
Can I speak? All right. I wanted to ask a question on. I've been hearing the term support and resistance a lot, right? Support, resistance, like one is up, one is down. Is it the same thing with what you are explaining? What you've been explaining? Like, let's say I'm seeing a red candle, like the last candle, right? Trying to break that lower low you talked about. Like the last candle is a red candle, right? Is that said to be resistance or support or whichever way? Let's say I'm seeing a green candle at the very top, and how am I supposed to know that okay, it's going to break the last price action there and move up, or it's going to come down? Because definitely these things sometimes, like you explained, higher highs and higher lows, they go up and just come down and whatever. So is that said to be support and resistance, or is something else? I'm really sorry if you don't understand the question, but please just try and do the best you can to explain what you're trying to say.
Okay. As I said, okay, it depends on the kind of trader you are. If you're trading trend line strategy, support and resistance, you look for support zones or resistance zone. Then if you're a trend line trader, you definitely watch out for your trend line or your channel, maybe falling wedge, rising wedge, and all that. Then if you're also a chart pattern trader, there are some places all they do is they look for chart patterns. Like for chart patterns, we have our M formation, we have our V formation, we have hop. So it depends on the kind of trader you are. For instance now, and we have head and shoulder, of course, we have head and shoulder too. Now let me see something now. Like some persons now takes this like the M formation. Let me see if I can identify one here. Okay. This is a M formation. Can you see it? This zone, yeah, is an M formation. Now, what some persons do is that, once they see something like this, once they see the first leg, as a chart pattern trader, once they see the first leg, one, and it goes down, the next one, that price is going up, what they watch out for is that they watch out for a reversal candle. Now, a reversal candle can be either pin bar, inverted hammer, and we have the three soldiers and all that. But basically, the ones that worked, like the one I used before and all that, I can use hammer or rejected candles. Now, if you should look at this place, this axis, this information, the information showing that here, we have a rejection candle. Look at how price has been rejecting these places with wicks. Now, this blue candle you're seeing here so is a hammer, but the inverted hammer. The inverted pattern, right? The inverted hammer, not just like normally if you're holding an hammer, you need to hold it upside down. So this one is the inverted hammer, that is upside down hammer. Now look at the main hammer here. Look at it at this zone. Now if you notice at this zone here, price was selling. It's an uptrend. Price was selling, came to this zone, gave us a reversal candle, which is the hammer. Now immediately after the hammer formed and the close of the hammer, what happened? Price started buying. Now after a pullback here, if you look at this place, right, a pullback. Remember, it's an uptrend, higher high and higher lows. Now immediately after a reversal candle, gives us a reversal candle, which is this hammer again. And what happened here? And all that. So it depends on what you want or what you want to be seeing. So if it's on an uptrend now, you always watch out for a reversal candle. Or we have continuation. Now we have other types of candles. We have bullish engulfing candle, we have bearish engulfing candles, and some other ones. I've forgotten most of them though, because I don't use them. But you can also use them. It's profitable if you understand it very well. Now, just like for the chart pattern now, we have our M formation. So after the first leg, the next leg, what you do is that you wait for a reversal candle, which is this inverted hammer around this zone. Yeah. After the close of this 15 minutes candle, this is a 15. It takes 15 minutes for this candle to form around this zone. 15 minutes for this candle to form. After this candle, after the close of this candle, rather, the next thing you do is you sell. That is the reason for this fall. But remember, this is a counter trend, because we have a pro trend and we have a counter trend. A counter trend is when the trend is on an uptrend and you are selling, is a counter trend. So you're actually not supposed to sell. You are actually supposed to wait for probably after the pullback or everything, then you can continue buying. So once the market is buying and you're selling, you are counter trading. So you have to be very conscious about that. But for the purpose of your question, this is an M formation chart pattern here. So we have the reversal candle. After the close of this 15 minutes reversal candle, the next thing is you take your sell positions, and your SL will be just slightly above your reversal candle. So your duty is for you to identify your reversal candles. Now let me show you an example of a bullish engulfing candle. Now, okay, a bearish one. Now a bearish engulfing candle is that you see a buy candle and a sell candle. But the sell candle, that's for a bearish engulfing, the sell candle will overshadow the buy candle. For this example, just look at the buy candle here. We're having the buy before the sell. Now this is a bearish engulfing candle. So the red candle overshadowed the buy candle. So what you do is that immediately after you see the close of the bearish candle on the 15 minutes time frame, you look for a sell entry. You just strike your sell. You start selling from this zone at the open of the next candle, and your SL will be at this point here, at this zone. And this is the result of the fall here. Then let me look for bullish engulfing. Now bullish engulfing, now you have to see a sell candle before the buy candle, and the buy candle will be bigger than the sell candle. This is the example again. Look at the sell candle here, and this is the buy candle. The buy candle quite bigger than the sell candle. Now the next thing you do is that you wait for the close of the buy candle, which the buy candle will definitely engulf the sell candle. Immediately after that, at the open of the next candle on the 15 minutes time frame, depending on the time frame you're using, you take a buy. You take your buy position. Now from your buy position, you take it definitely here, and your SL will be slightly below here, and you sell down to this place. But remember, this is a downtrend. That is the reason why I did not continue buying. So you are actually counter trading. So it's just for you to be identifying all these things there on the chart. As I said, it depends on the kind of trader you want to be. Like, look at the, let me show you another one again. Another example of bearish engulfing candle. Look at the last buy, bought, and the sell engulfed the buy candle. So immediately after that, around your 15 minutes time frame, you take a sell, and your SL will be at this point, at this level. So I don't know if you understand what I just said.
I do. I think I do. That's easy.
Okay, so I don't need these more questions. And Boss Frank,
Right on, boss.
so I think maybe one of the assignments I should be giving is how to identify an uptrend, a downtrend, marking out their zones such as break of structures, and it depends on the kind of traders you want to be. Not everybody will definitely be trading supply and demand or trend line. So if you're a trend line person, you know that after from your third touch, you take either a buy or a sell. Then for those who are using chart patterns too, they can also identify their chart patterns too from their charts. And those who are using reversal candles too to trade too, it's quite alright. So I don't know if there's any other question.
I have a question. Please remind me, what do you say about that reverse hammer? What do you say about the reverse hammer?
Okay, we have the reverse hammer is basically it's just telling you that a particular trend is about to change direction. Meaning, if for instance you actually buying, at some point there's a particular point you get to that you see a reversal hammer or a shooting star or a bearish engulfing or a bullish engulfing, it will show you that if this market is buying, we should be expecting a sell from that zone. So we shouldn't be buying anymore. Buyers, okay, sellers wants to take charge of the market. Just like I explained something here. As I said, knowing your structures matters a lot. Once you understand your structures, which is your higher highs and higher lows first, and you can simply identify your reversal candles, then you're good to go. You can just be trading on your own. Like this zone here. Look at this place now. Buyers were in charge. Going. And when it got here, we had an engulfing candle that engulfed our buy candle, which is the bearish engulfing. So your entry will be immediately after the close of this bearish candle, which is on the 15 minutes time frame. So you take a sell from this point, and your stop loss will be slightly above here. Now for that reversal hammer stuff I was talking about, I think we had quite an example of it here. Yeah, I have quite an example of it here. Look at one here. This is a reversal. That is upside down of an hammer, understand, or a hammer. There. They also have one here. That is a normal hammer. So seeing this now at this level, we know that the market will definitely be buy. So what are you going to do? You wait for it to close. You don't just buy. You wait for it to close. Immediately after this candle is done, like on a 15 minutes time frame, you just wait and you strike your buy, and your SL will just be somewhere here. Just somewhere below here. That's where your SL will be. Do you understand the logic?
Boss,
Yeah,
hello, boss.
yeah.
In absence of any question, I actually just want to chip in one or two things.
Okay.
So, I really appreciate this effort you made to actually explain those strategies, supply and demand, the trade line, and the characteristic patterns. But I actually like to talk more on risk management, though.
Okay.
Yeah. As we all know, that risk management is one of the three central pillars of trading, along with strategy, which Boss Josiah just talked about, and psychology. This actually has to do with our mindset. The truth of the matter is risk management, psychology, and strategy actually works hand in hand. You might actually have the best trading strategy, be it you're a day trader, you're a scalper, or you're a swing trader. But without proper risk management and psychology, you will lose a lot of money. So it's also important to also learn risk management. So as we know that we can't always win every trade as a trader. There will always be some losses. And those losses are the things we actually want to keep under our control. The aim is minimal loss and maximum profit. So the other part of risk management I would like to touch on is one, our trading size, that is our margin call, our stop losses, and our take profit. So we can actually, there's what we call the 2%, the 2% rule. The 2% rule states that you must not use or lose more than 2% of your margin in a trade. What do I mean? You have a trading account of $100 and you go in with a $10. The 2% rule says you must not lose more than 10%, 2% of your $10. This is about $0.2 in that trade. Right. So your leverage is also very important. The higher your leverage, the higher your risk of getting liquidated very quick. Take for instance a person using a 20x leverage with the 2% rule on if they actually entered with a $100 account, you are at risk of losing like $40 of it on 20x. But if you actually use the normal 1x, or let's just say 5x or 10x, you are at risk of losing like $20 out of your $100 if you actually go in with the $100. So that's what the 2% rule is all about. And you need to take very, very, very good notice of your stop losses. It's very, very important. I keep protecting that point. Stop loss. It's very important. And we have a lot of strategy which we can actually use, like a risk to reward ratio. Most people use like 2:1. At least as a trader, you must not go below the 2:1 risk to reward ratio. What do I mean by 2:1 risk to reward? If you are willing to lose $10, you should be willing to gain at least $20 from the trade. A 3-to-1 will be losing $10 for a $30 profit. So if the trade actually goes against you, you lose $10. But if it actually goes the way you plan, you'll be at risk of getting $30. So the stop loss is very, very, very important also. Another thing is you need to identify a trade setup that actually works for you. A lot of setup works for different people. Mine might be smart money concepts. Other people might be retail. Other people might be trade line. Other people might be price action. Other people might be support and resistance. Just try. Look for what actually works for you. Always make sure you backtest your strategies so that you actually know what actually works for you. And one thing you should actually put in mind is after you achieve your targets, anything happening around the market is none of your business again. There's always opportunity in these markets. Don't be too emotionally attached to a coin or to a trade. No. You can't lose most of your money. You might even end up getting liquidated from it. So you should not be so emotionally attached to trades or to coin. So once you actually exit the market, anything happening again is none of your business. You can actually use those time to learn more. You can use those time to pull off. You can use those time to do other things you actually intend to do. Then you wait for other opportunities in the trade. And never FOMO into a trade. Never FOMO. Never FOMO into a trade. Never FOMO into a trade. As a trader, you actually need some qualities. Like qualities you need to have. Number one of it is discipline. You must be very, very disciplined. You must always adhere to your stop loss. You must always adhere to your trading strategy, to your trade setup, and so on. Consistency is also very, very key in trading. Consistency. The more you practice, the more you learn, the better you become. The better you become a profitable trader. Because the goal is actually to be a profitable trader, not just to be a trader. You have a lot of people that you can actually see them. That some might actually be like 200% return on investment on the trade. And trust me, those people sometimes come out on a loss eventually from trades like that. So we must always strive to become a profitable trader, not just any trader. Consistency is key in achieving that. Another thing is patience. Patience is very, very key in trading. I have some experiences personally though that will actually make a setup. After my setup, I've seen everything. I'll see the trade reversing. I'll just go and FOMO. Then I just FOMO into the trade because I'm not patient enough for my trade to actually trigger. So I'll just FOMO. And at the end of the day, I'll lose my money and my trade will actually reverse back to my initial entry. Then we start expressing my zone. So patience is actually very, very key in trading. You need to be passionate about it also. And you need to start gaining confidence. You need to start gaining confidence in trading. Be confident in yourself. Be confident in yourself that you can actually do it. So the more you learn and the more you practice, the more confident you become. So I feel that's the little I actually want to chip in. Yes. I don't know if you have any question. I'll be willing to answer them.
Hello, sir. Hello.
Yeah, I can hear you, boss.
Okay. My question is, I think on leverage, right?
Okay.
You know, the signals they drop on the group. They're always 20x.
Okay.
I don't know if we can talk about that leverage because the thing is, someone trading with a bigger margin and using that 20x, if that trade should come down a bit, like assuming we are meant to long, and then that trade is coming in the reverse direction, someone using a bigger margin compared to someone using a smaller margin, the person using the smaller margin will be taken out on time. So I don't know if you can talk about that leverage so that it can help those that still have small capital in their trading account.
Okay.
All right.
On the leverage, I feel the bigger your margin, the lower your leverage should be. I don't really expect you to use like 20x leverage when you're entering with like 500 bond USDT. I was expecting you to use more of like 5x, 3x.
Okay.
But as a newbie, let me just be very plain and frank with you. It shouldn't be, your max leverage should be 5x as a newbie. Yeah, you should actually stick to 5x for now. A proper risk management. Just stick to 5x for now. You can even go below 5x, 3x, 5x. Yeah.
Alright, sir.
But as time goes on, you can actually keep improving to like 10x.
Okay.
20x should be for like you have small margin, like you're entering with a small margin, and you actually want to swing the trade for so long. So you can actually use the 20x to maximize more profits. Okay.
Alright, sir.
So for now, you can actually just stick to 5x or below.
Alright, thanks.
Yeah, you're welcome, sir. Any other question?
Good morning.
Yeah, good morning, boss.
Yeah, thank you for the class. The question I have was this, for, how will I put it now? Most times, most signals I see, like if you calculate the percentage loss to the percentage profit, let's say TP1, the RR, that's the risk reward ratio, is usually like maybe you are risking 30 account to gain 10% or like 15%. How can we manage that?
Okay, thanks for that question. That's why it actually comes down to the knowledge of technical analysis. There's what we call requirement. There's what we call requirement in trading. It might actually be possible that most of the entries given is given on higher time frames like 1 hour. Some is actually given on 4 hours. So once you mark out those zones on the higher time frame, you go back to your lower time frame to actually look for entries, like a 1 minute time frame, 3 minute time frame, and a 5 minute time frame. Right. To look for your entries. By that, you are actually minimizing your risk to a very great extent. Because once you find, and that's, for example, now on a 1 hour order block, your risk to reward ratio or your stop loss percentage can actually be like 10% stop loss, which is actually way above the 2% rule of trading. Okay. So in that scenario, you can actually go back to your 1 minute, your 3 minutes, to just see a clearer structure of it. So in your 1 minute or 3 minutes or 5 minutes, you will actually see like a particular order block or a demand zone or a supply zone that you feel the market is actually going to mitigate. You can actually map out that zone, place your entry and stop loss. At the end of the day, you see your stop loss will be reading around 1% of stop loss, 0.7% stop loss, max 2% stop loss, or 2.7% stop loss. You get? So in those cases, you can actually refine your entries to minimize a lot. You get? But your take profit is still the same profit. Another question, please.
Hello.
Yeah. Good morning.
Thank you very much for good morning. Thank you very much for these insights. They are really very helpful. I normally use a laptop when I want to trade. You made mention that when you want to set your take profit and the stop loss, that you will see it, what probably you are going to lose or what you are going to gain using the stop loss and the take profit. I don't normally see my own. The only one I see is when I want to place a trade, I see the cost. So where can I really check it?
Okay, on your trading view, there's a tool. There's like a tool, like the long position tool and the short position tool.
Okay.
So once you actually use that tool, you just put the place the tool like to your entry and you move the stop loss path to like above your other block you use or your demand zone or your strike zone or your trend line zone or support and resistance zone. Any trade setup you are using. So once you do that,
okay.
I move your take profit down to the level you're actually intending to go to. And you see your risk to reward ratio. It can be 3 point something, it can be 4 point something, it can be 8 point something, it can be 15 point something. Yes, and you see your stop loss percentage written there also.
Okay. Now that's for the benefit of this technical analysis, right? When we relate it to these signals, as in when I want to relate it to these signals now, if I am trading with the signals, is it possible that when I am setting the take profit and stop loss, that I will see it?
When you are setting your take profit and stop loss, when you see the internet profits or the internet stop loss or take profits is when you are actually in the position and you're like trying to stay your stop loss. So once you start trading your stop loss, you start knowing the amount of dollars you are about to lose in this trade if it actually goes against you. And the amount of dollars you are about to gain in the trade if it actually goes the way you planned. You get?
Okay. Yeah.
So
it's all right. It's okay. Thank you very much.
Yeah, you're welcome.
You've really done a great job now. Very insightful. Thank you.
Any other question? Okay. Can I actually ask 2 questions? Like throw it to the house, I said. So that we can actually learn more. Yes.
Alright, sir.
Okay. So to become a profitable trader, how many percent accuracy in your trading do you think? you should have? Like how many percent accuracy to actually become a profitable trader?
Maybe
Right, I think
okay.
Maybe what?
I think around 90%, maybe around 90%.
Okay, you said 90%.
Yeah.
Any other contrary opinion?
Me, I think it depends on the trader's risk reward ratio.
Okay.
Because
Nice.
I've seen traders that I've seen a trader that when he sets a trade, when he enters the trade, his stop loss can be 140 pips, and his take profits will just be maybe like 20 pips, 30 pips. And most of the time, the trade may run for days. I mean, the trade may run for 3-4 days. Most of the times, it will still go back to his TP. And maybe once in a while, he hits his stop loss. If you understand? So I just think that it depends on, and you can be a trader having maybe a 20 pips stop loss and 50 pips take profits, but if out of 10 trades, maybe like six or seven hitting stop, I don't know if you get what I'm saying, but to me,
I'm getting you.
it depends on the risk reward. Sure, you can be 30% accurate with your trades if you have a very great, if you have like a 5-to-1 risk reward ratio and still be profitable. So that's what I think. Sure.
Exactly. Very good.
right, but about what you just said, I also feel like anybody who wants to do something like that, like what Ayomide just said, needs to have like a large capital, right? Because you can't do that. I don't think you can do that on a small capital. Because with what you just said, you talked about pips, like 140 people. I think that's forex, right? I don't really trade forex, but you need to have like a large capital to be able to watch your trade pull back that much, right? I think with crypto is you need to have like a large margin to do that. Like your trade will pull back that much, and you're hoping for a reversal to get like just 10 pips, just so that you can exit in profit. But for somebody who has a small margin, you can't get to that large number of pips without getting liquidated and you're getting out of the trade. Right? So I think it also depends on the kind of capital that you have. So for me personally, I feel like if you can get your wins can be more than your losses, I think you'll be profitable. Let's say let's look at percentage now and saying that okay, like 60% win, 40% losses, because 50% start getting losses, right? So if I win the 60%, depending on what my target is, or let's say I'm looking at making 20 USD per day. Okay, and I hit 15 today, and I hit 5 tomorrow, and the next day I trade and I just made like $5 loss. I'm still very profitable. So it depends on a lot of factors basically. But I'd love to hear what Mr. Haribami has about this. But that's just my opinion, basically.
Sorry, can I say something? Sorry,
Okay.
Ross.
Yeah, no, Alan.
Do you know that it's possible for you to be 80%, your winning ratio to be 80%, and you still are not a profitable trader if your risk to reward ratio is not good enough. That's what I just think, Sha. So I think everything still goes down to risk reward. That's
Exactly.
just it.
Exactly. You can actually be 90% accurate. Yes. You can actually have a 90% accuracy, and still, if you do not have a proper risk to reward ratio, you might not be profitable. Why someone with just 25% accuracy, 25% accuracy with the proper risk to reward ratio can actually be very profitable. In what sense? We can actually do the calculation ourselves. Let's say, for instance, we have $100 account. You get, and out those accounts, we picked 4 trades. You get, and we are there by our 2% rate, 2% trading rule. At least you must not lose more than 2% of your trading margin. So you put in now your $100 into a trade. The first day, you lost the trade. That's the $2 lost. Yes or no? This is like the form of the marathon. Right? 2% of $100 is $2, right? Hello, can you hear me? Hello?
You can.
Can hear you.
Okay. So you lost 2% the first day. The second day you lost 2%. The third day your risk to reward is like 4:1 or 5:1, and you gain 10% of your trade. You get, and the fourth day you lost 2% again. That's how many losses in total. 3 losses, 1 gain. Yes or no?
Yes. Yes.
And in total, are you profitable or not?
You are profitable now. Profitable.
Yeah.
Exactly. You lost $6, you gain $10. Your net profit is actually $4. So let's take, for instance, someone now actually has a $100 account. Looks to reward is actually less than 2:1. Because the person gains probably $1.5 based on the risk to reward. The second day gains $1.5. The third day gains like $2. And just a single trade, you lost like $10. That's how many wins?
I think that's like 3 wins, 1 loss.
3 wins, 1 loss. Is it profitable or not?
No, it's not.
It's not profitable. Because those 3 wins could not actually account for his loss. Just that single loss. A single loss in trading in the financial market can actually be the end of that account, of that trading account. A single trade can actually get you liquidated. It might have been winning like for days, for weeks, for months, but with lack of proper risk to the world issue or risk management, you can actually blow your accounts with just a single trade and start afresh again from the beginning. All profit gone, capital gone. So you actually need to endeavor to become a profitable trader, not just a trader. Not just have 90% win, 90% accuracy, and trade is always on point. The point is that you're making money. Because we are in this market to make money. Trading code. Always here, if not for the money. Huh? We are here to make money from the market. So I can just us all, please let us try to have a good and proper risk management. It's very, 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 very important. Very, 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 very important. And at least for me, anything less than a 3:1 risk to reward, I don't go into the trade. That's just for me personally. I don't know about you. Yours can be 2:1, yours can be 4:1. Some people can be 5:1, depending on how much you are willing to lose. Yeah. But for me personally, I adhere to a 3:1 risk to reward. And I train my stop loss a lot. Because I try my possible best to actually sit on my capital. I make sure I train my stop loss. I don't know. Okay.
Okay, it's more like a suggestion question. I don't know. You share somewhere in between the two of them. So I think that like when we are trading, as all of us should have a target, like profit target for that day. I think we should also have a loss target. I don't know if I'm correct, Sha. Maybe
Yeah,
the
sure.
bosses in the house can answer me. Because like if you have a profit target of let's say $20 per day, you should also have a like loss target. Maybe if you lose up to maybe $20, $10 or $30, I don't know, depending on the individual, then you just stop trading for that day till the next day. I don't know if that works or it's something that is applicable. I want to be clear, Sha.
It's very applicable. That's why before you actually go into a trade, it's important to actually know your risk reward. Because before you go into a trade, you know already that you're willing to lose this $10 to $30 from this trade if it actually goes well. And you know if it actually goes against you, you are losing $10. You get, and if it goes the way you want to, you gain $30. So before you actually take a trade, initially, you know what you are about losing. If it's actually worth losing or risking, then it's fine. You can actually go into it. You got it.
Okay, I get you, Sha.
Okay. Nice. So, and it's also very important. I don't know. Most of us here, I don't know if you actually have a trading plan. Do you all have a trading plan?
So please, what is a trading plan?
Oh, a trading plan is just like an insight. Your strategy, everything in place. The stop loss, the targets for the day, your strategy you want to employ on that trade, the risk management, the risk to reward ratio, and all sorts. You have everything analyzed already initially before you're actually going to into a trade. And some now, if they actually attain $50, they have the market for that day. Some is just 30% of the initial margin. So you can actually see some trader sometimes if they actually attain 30%, they have the market. Even if the trade went on to do 1,000%, 2,000%, 3,000%, it's none of their business again. Yeah, so you should have the target in mind. Okay, from this trade, I want to make XYZ amount of money, and I'm willing to lose XYZ amount of money. For that day, my target is $10. My target is $5. My target is $50, $100, $200, depending on your capital size. Yes. So it's very important to have a trading plan. You have it sorted out already before you actually go into the trade. Like I said, the 3 pillars of trading, which everything works together. Risk management, psychology, which actually deals with emotions, fear, grade, everything. The mindset in general, and trading strategy. I will always keep saying 3 of them works together. You might actually have the best trading strategy in the world, if you don't have proper risk management or you're very boss at psychology, you might not be a profitable trader. You might have the best risk to reward ratio. If you don't have the proper trading strategy or the psychology also, you might not be a profitable trader. You might actually have the best psychology on earth. If you don't have the proper risk management or a proper trading strategy, you might actually end up not being a profitable trader. So the goal is to actually be a profitable trader. There are a lot of opportunities in this market. There will be a lot of opportunities in this market. So if you actually miss out on one opportunity, just be patient, relax, chill out. Other opportunities will actually come in place that you can actually scoop or mend the bush that will move. Yeah. You have a lot of opportunities in this market. Yeah. I think that's the little I'll take on risk management and risk to reward ratio. But there's actually more to it though. There's more to it. I think that's the little I'll take for now. Boss Frank, are you actually still on this meeting?
Yeah. I'm
Okay,
really,
boss.
really. Yeah.
Okay, boss. I don't know if you have anything to like address or.
All right. So thank you so much, guys. Thank you, Ayobeni. Thank you, Braley. Everybody that have showed us one or two, that have shared one or two with us this morning. I really appreciate you guys. Thank you so much. And risk management is it's the most important thing in trading, right? You can have all the strategy, you can have everything, but without the proper risk management, you make money and you blow it. You make it, blow it, and you keep making and you keep blowing it. You see, I've been sharing some of my results on my status. I will stop sharing it actually, because it actually attracts a lot of billing. But I was just doing that to actually show, because a lot of people have, whenever I enter a trade, I make sure number one, I check my capital. One of the reasons I see a lot of people with small capital, and either they're entering all in or they're using big leverage and everything, and a little retrace in the market will blow the account. So which is very important that you know your risk management. When I enter a trade, I set with my, let's say I have a $1,000 account. Do you know I still enter with just $50, $100. But I see people with $200 account, they're entering $100, half of your portfolio, half of your account, which is not cool. All right, the game is to be consistent, is to be profitable consistently on the long run, to be consistent on the long run. Not just now, not flipping your account, cashing out big bucks, blowing everything. No. I was listening to Jimmy, one of the biggest traders. He was saying all these people that flip the account and all that, it's quite okay. It's okay, all right. But then 3 to 5 years, will you still be in the game? Will you still be profitable? All right. The goal is to be profitable long term, and that is why you need to have proper risk management and targets that you hit and leave your market. All right. So let's say you even, for the past 2 weeks, I've just lost $100, just $100, and you've seen I've made millions already. So you see that it's crazy. It's very, very mad, because I use minimal money to enter and I stay focused. And anytime that I hit my target, I leave the market. I don't fucking care whether the market is pumping again or not. I don't give a damn about it. I'm off the market. Withdraw my USDT and stack up. Alright? Because crypto, because you need the money you are seeing your screen is not your own until you withdraw it, until you can see it tangible self. Right? Because anything online can fizzle out anytime. Alright? The government can decide to shut down the internet. Binance can decide to go. USDT can decide to dip. Alright, so that's why you need to take all these things. You need to be profitable long term, and you need to be focused and have a target and everything. Make your money, pull it out, do something real with it. Go out of the market, because the market is draining. It's mentally draining. So once you just hit and everything, and even if you are losing small money, all right, you're losing small money, you're losing minimal. Let me just show you just something simple that will just go on your charts. Let me share my screen. You can just go on your charts, just draw your simple trend line to help you a lot. This one is just my second account. There's nothing actually. I'm a very conservative person. I don't throw money around. I don't even like losing in my trade. That's why if my trade starts moving, I just shift my. It's better to preserve your capital. All right. It's better to preserve your capital. Capital preservation is better than you don't make any money. Better to preserve your capital than losing your money. All right. So look at this near. This near has formed a double top and it's crashing down. Because I was in this meeting now and I forgot to enter this trade now. So just same. Do you see how this chart is following my line? It will touch up, come down, go up, come down, go up. It's coming down. Came here, formed a double top, it's coming down. It's crazy. Just drawing something simple like this on the chart will help you. So if you enter the trade, you might not necessarily use the stop loss because why we are putting that general stop loss is because of there are those that has like $100,000 accounts there, right? They have big account that they can chest the retracement and everything. But then if you don't have that kind of thing, you should know exactly when to leave the market. Let's say you enter this kind of thing, like you just enter this near, you're shorting this near because you saw this thing. Your stop loss should just be above the trend line, just above. Let's put this line. Let me change the color to red. Yeah. Let's say you just short near because it has touched your trend line and also formed this, gave you this double top. Just your stop loss should just be above. Put your stop loss above. You see, it's very tiny. If you enter this trade like this, you don't lose much. If the market breaks out, you don't lose much. All right. So let's say you even want to be conservative. All right, just place it. Just place it at just above there. Just place it there. All right. But most of our stop loss is usually very far. All right. Well, let's say you just short this low, you just short this near. Just put your stop loss above the trend line, and your take profit should be just take profit should be down here, because if it comes down to touch this line again, it will react, right? So you just put your take profit just down that line, all right, just below. Just wait for it to crash down to that line before it will react again to pull up. So just knowing just simple stuff. You just open your chart. You open your chart, pinch it. Try and connect the highs and the lows. Just use your trend line, connect the highs and the lows. Alright, and watch the way chart will just be hitting, come down, hitting, come down. This is just basic. This is just basic technical. Just like this, just the basic technical analysis that even a newbie that is using it, if you're a newbie that is using just this basic one, you'll be making money. You'll be like, your win rate will be very high. Right? Before you start advancing to other blocks and everything. Just learn inline support and resistance. That's just all you need. Yes, I have this my friend called Ghost. Sure, you can still see my screen so that let me I will continue. Someone should talk so you can see my screen. Can you still see my screen?
Yes, we can see my screen. So.
Okay. So a friend that is a forex trader goes 375. Alright, so this is majorly what he uses to trade trend line. Like you can look at this sheet. $800 to over $20,000. Basically, you use like close to 500k to make 10 million naira. And you just say the only thing he uses is just trend line. A lot of people underestimate these trend line sheets. Alright, once you just learn how to, and I even shared an ebook on trend line stores. Once you just learn like how to just connect highs and lows, it will really help you because you actually know when to enter the market and you know exactly when to leave the market, right? So when you just get this, the next thing you'll be thinking of now is patience, because most people they don't actually wait for the market to just come to them. They FOMO in, all right. You should be patient. One of the things, trading is 90% patience. All right, you wait for the trade to come to you and you enter. All right. So when you enter a trade, know exactly when to leave based on your portfolio. Based on your portfolio, guys, know exactly when to leave. Take your profits and move. Someone with a big account can stay in the market as long as they want, because they can chase any retracement and everything. But someone with small accounts might not be able to chase it. Maybe the retracement might blow your account. Alright? So, and one of the things I do when I enter a trade, most times I even move. Let's say I have $1,000 in my account, in my futures account. I move like $800. I'll just leave $200 and enter a trade, and one trade at a time. I just enter one trade at a time, right? Because if you have a small account and you enter multiple trade, there's a high tendency that once all those trades start moving against you, they'll clear your account. They just clear it immediately, right? Risk management. They have talked about risk management, which is very, very important. Please, all right. You can, if you know 20x is still high for you because of your small margin, you can start with 10x as a young leader has recommended, right? 10x is okay. If you know you want to enter with 20x, make sure that the money that you're entering with, that you have a portfolio that can chest it, that can hold it, all right? So, and also they have said everything. Have a target. Please have a target. Know exactly if a signal is shared. Actually, if a signal is shared, all right, you can just look at your chart. Okay, you can just look at your chart and enter. And when you enter, know exactly when to leave. Okay, know exactly when to leave. Most of those trades might not even come to our stop loss, all right, because the stop loss is actually far. So before they hit the stop loss, they will start going back again. But those with small accounts, it will clear them before it even gets the stop loss. That's why you actually need to know exactly when to, because as they said, all fingers are not equal, all portfolios are not equal. All right, so that is very, very important that you know your risk management. Preserve your capital. All right, your capital is like your gun. Once your trade has moved, move along with it. It's better you preserve your capital than to lose all your money. But unfortunately, the financial market is filled with regrets. It's filled with regrets. I have a friend that he asked me, his trade was in a loss, and it was like, Frank, should I close? I don't really like answering that kind of question because your life is totally dependent on you. Like, it's your responsibility, all right? Because anything that happens is on you. When you're already in a trade, do whatever you wish. It's your portfolio. You know your risk level and everything, all right? So that's why those kind of questions I usually ignore it and all that. But then he asked me, okay, should he close this trade in loss? I looked at the chart, so I said, okay, like, you can just leave it, because I'm not a market maker. I'm a retail trader, just like you and me. Okay, so I said, okay, now leave it. It might just come back, all right? He was shorting Bitcoin, so unfortunately, the market came back to its entry and everything. Say, okay, Frank, it's now in my entry. Should I close? I say, sure, you were asking before. You are begging God so that you will close. You were in loss before. You are begging God to close. Now it's back to your entry. You're asking if you close. Why not close now? He said, okay, he closed. Before you know what was happening, he came back. He started telling me, you are the one that told me to close, so I would have made profit. Look at the trade is going in my direction. I just laughed. I just did that. I laughed. I said, wait. Okay, now you are regretting that you don't make money. Whereas you are losing before, you are praying. How the financial market is filled with regrets. You make money, you'll be saying you would have made more. You lose money, you start saying you would have closed.
Right.
I just laughed at him. I didn't talk to him again. And the next thing he chatted me up. He said he has lost $500. I did not talk to him again, because this I just saw that this person have not mastered to control his emotions in the market. He has not even mastered risk management. Yeah?
Those kind of people are gamblers. They're not really traders.
Yes.
They're just going to the market to gamble.
Yes, exactly. They are gamblers, but they are not traders. They trade with their emotions. They just trade anyhow. God. So you should learn these things, all right? Learn to go. If market hits your entry, let's say you enter a market move and it hits your entry, don't just relax. Whether if others are posting profit, don't come and be saying, I would have made money. What if the market clears your account? So you should learn how to control your greed level. Greed is one of the things that kills traders. Greed. One of the things that kills traders. I also have one of my students. He was hitting. Like, his daily target was $20, and he was hitting it consistently. He upgraded the daily target to $50, and he started trading aggressively. And he was hitting the $50. So I agree, because he was just using my trend line strategy. I just showed him trend lines, and he was using it. He was hitting the $50. Before you know what's happening, man has increased it to $100. I said, whoa, relax, bro. You don't blow, you grow. You are trying to blow in overnight, and when he has even hit the $50, he will still be in the market. Why? You don't buy everything when you won't buy for market. Why are you still in the market? And before you know what's happening, market will collect everything and more. So if you don't learn how to control your greed, you don't discipline yourself, you don't learn risk management, you keep making money and giving it back to the market. And one thing about the market, if you want to collect, it does not collect just only the one it gives you. It will collect both the one you left, collect everything. All right. So have a daily target. Stick to it. Make sure you've mastered. There was a time I was doing $50 daily, $100 daily in forex. Like, it was very, very consistent. Like, I know exactly. I'll just wake up by around 8, open my charts. When I analyze like 2 to 5 charts, I already see setups. I'll wait for it. They'll come to my point of interest, my POI. I'll enter, hit my $100, and move out. Other traders will be trading from morning till night. They want to flip their account from $500 to $2,000. That's very, very okay. All right, that's very, very okay. But we are looking at the long term. Long term, will you still be profitable? Long term, between you and me, who will have money pass? Long term, between you and me, who will have stacks of cash somewhere packed up? All right, because me, I just trade, I hit my target, I withdraw, I go to deriv, I click withdraw, I take my money, I'm off the market. Well, if you guys like flips to 10k, I don't fucking care. All right, so you learn discipline. Learn how to discipline yourself, guys. Learn how to discipline yourself. If you have a trading target, stick to it. If you make more, if you hit your trading target and you still have some trades running, first of all, close up your trading target and just leave the other ones. Move it to entry. All right, so that even if you hit, fine, you don't have anything to worry. I know we want to make $500 in a day, $200 in a day. It's very, very okay, all right. But once you've made your trading target, make sure you move it out. Other ones you are trading, make sure you are trading on a free ground, risk-free. So that anything that happens, it does not affect you. Once it hits, you off, because losses have a way of, making you unstable mentally. And once you are unstable mentally, you cannot trade. You see, once you start hitting loss in the financial market, you start hitting it back to back, because now you are trading with your emotion. You are not stable. You make profits once you are stable, once you are mentally stable, like once you are relaxed. That's when you really make money. But if you want to revenge the market, you want to make money, like you lost money, you want to go back and make it back, you are fighting with the market, you might blow everything. Right? So guys, just have a trading target. Make sure you are using risk management. All right. What we are looking at is long term. Long term, will you still be profitable? So it's not about now. Long term, how much will you have stacked up? Long term, what are the we are looking at long term. We are not looking at who will be flipping account from 0 to 300, which is very okay. But long term, will you still be rich? We are here for the money. We are not here to flip account. We are here to make profits. You want to showcase to the world that you're a badass flipper, or you want to be rich. All right. I know most traders. Like I just started learning trading newly. Like it was just around this year. I took it serious. But in most of the traders group that I belong to, most of them, they inbox me, boss, can I manage your account? They are always posting account management on their status. All right, always looking for money to. I don't do that. Okay, I can't. I'm a trader. I'm a very good trader, but I don't focus on flipping and all that. I focus on making money. Make my money. I focus on long term. I want to be rich long term. I don't want to auto sleep out. I'm not interested. Right? So stay focused, guys, and please have a target. Know when to enter and when to lose. Thank you so much. I hope we can take over.
Okay, boss. Thank you very much, boss. And about those people that are always inboxing you for trade account management. One thing you should also know in trading is you should never trust anyone with your money. And that's a very important rule. You should also stick with. Don't give your money to other people to trade for you. No. Manage your trades yourself. You get. Take your trades yourself. Don't entrust your money to other people. And I feel maybe we can actually work this out in the group. Probably setups are dropped in the group. For newbies, if you actually see like 30% profit, you can actually exit the market. And the 30% can actually be on 3 trades, like 10% on each trade, or just 30% on just one particular trade. Once you have that, exit the market. Compound your profit. Enter the market again the next day. Exit your market after 30%. I keep doing that for a month. And you will actually see the wonder that will actually happen. You can actually build like a $10 account, like $1,000 account with that alone. Go all in with your $10 account. Make sure you don't lose more than $2 when I'm going in. Target 30%. And 30% or 40%. So 30% is cool for a start, because 30% is very easy to attend in this market. You get your target should actually be 30%. And once you hit your target, you have 30% of $10 is like $3 or so. So now you have $13 to trade. You get, go all in with your $13 again the next day. Carry 30%, compound it. You have like 16 point something dollars or so. Go all in with that also. Compound, keep compounding like that. Make sure you don't use more than 2%. It's very, very important. More than 2% of it is very, very important. And remember that is some trades now it actually go against you. Yeah. That's why the 2% is very, very important. So you can actually try that for a whole month. Don't go above 30%. Like for your trade profits, let the target be like 30%. And for your stop loss, max stop loss should be 2%. So if the lower your stop loss percentage, the better for you, honestly. If your stop loss is even 0.5%, it's good for you. 0.1% is good for you. So, but make sure your stop loss is not more than 2%. And let's stick with that 30% first. Let's see the result is actually going to yield. You know what to do from there. I think that's all I have to say. I don't know if there's any question again. Do you have any questions in the house? Can you hear me?
Yes, I can hear you.
Hey,
Okay.
No questions from my side.
No questions. Okay. So I think this is the end of, because this has actually gone on for like 2 hours plus. So it's actually nice having you all here. You get. So let us try and endeavor to be a profitable. Thank you.
Thank you, sir.
Yes, thank you very much.
Yeah, I appreciate it. You have a nice day ahead.
right, thank you so much. Thank you. Yeah, thank you. Thank you everybody for coming around. You have a great day. Sorry, who is this blessing? Who is this fine picture I'm seeing here? Blessing pair. Hello. See fine girls. Okay. All right, guys. Take care.